Hi, everyone. Thank you very, very much for tuning in for this exciting session. This is Namir Khan with you, Chairman of MENA Fintech Association. And I would like to once again welcome you all to this exciting session that we will be having today. So the world has changed. The world is not the same way the way it used to be before. And, things have changed, things have transformed. No industry has been spared, no country has been spared. And most importantly, this has led to dramatic shift and change in the consumer and the customer behavior as well. And I think the way dramatic changes have happened, most importantly, the dramatic shift in the way we do business has also happened, and it has surfaced, I must say, bigger than ever before. And all of us at the same time are either, we're looking into things like we haven't looked at before. All of us are giving more thought to things around us, and things have been once again being understood. And at the same time, we're trying to find a way out as well. And some have already found a way out too. And some of those key people, some of those key leaders and insights who we have today over here. And I would like to quickly introduce my panelists over here. So I'll start with Davy Mohan, who's also one of the top fintech influencers and leaders from UK. Davy, welcome. Davy is also the CEO of Burnmark, which is basically a fintech-focused research, research company. At the same time, we have JJ. So JJ is basically leading the global financial industry transformation for Santander Group. JJ, welcome to the session. Then we have Fabrizio, who is basically the executive vice president for MasterCard and leading data and services globally for them. Fabrizio, welcome on board. And then we also have Hakan Aruglo, who's a global open banking lead for MasterCard. Once again, open banking being one of the most discussed topics at the moment. So Davey, I'll come down to you quickly in terms of my question. The first question that I have is basically based on your research had. I mean, you must have been closely observing what has been happening across the globe, across different industries too, right? Now, when we're talking about fintech in specific, see, I mean, pre-COVID, there have been a lot of changes as well, right? And then came COVID, right? So I don't want to say COVID too much. We have gone through that phase, but what I would want to understand at this point of time, since you are a specialist in terms of research, what is that staggering development that you have seen in the fintech industry, to be specific?
Yeah, thank you, Namir. You're not the first one to ask me that question. It's on top of everybody's mind currently in fintech. To begin with, as you rightly point out, the kind of changes we are seeing in fintech, the long-lasting changes, they haven't started happening yet, in that we will see the impact only in another 6 months to a year. But what we can tell is a few numbers or statistics which will give us a direction of where it's going. Mm-hmm. We found that in the last 3 months, we have had a 70% increase in download of fintech apps in general in Europe. Now, it's not all kinds of fintech, though. That's where we need to be careful. The kind of apps that are being downloaded are mostly digital payments, lending, SME or cash flow management apps. And the challenger bank downloads have actually gone down in the UK.
I was about to come to that. Okay.
Yeah. So we have seen a between 20 to 30% reduction in the number of challenger bank downloads in the UK. So it's not across the board, but we find that in general there is an uptake. Now, the concern I have as an independent observer is whether this will continue. The use of digital payments, the use of digital lending solutions will continue after COVID. But that's something I think we need to get together and talk about in about 6 months. Now, we also need to look at the diversity of countries a little bit, because Asia is quite ahead in terms of digital payments already. And Europe has been slightly behind. Now, highly cash-based societies, for example, Germany and the UK, the number of sessions of using existing apps, for example, apps from your bank, apps from your fintech, that has gone up significantly in the last months. Okay. Yeah. So in Germany, it's 30% higher than before. And in the UK, it's 10% higher, which is not a huge amount, but quite high in terms of a view of cashlessness in about a few years. And new models are emerging. So it is positive in general, but I really wonder how much will last once everything is over and people are back out shopping, and how much cash will actually disappear in the long term.
So, I mean, this is interesting what you mentioned about consumer behavior. And I mean, you see a shift happening, but you would also be interested to see if this shift prevails post this entire drama that we're going through right now. Now, Fabrizio, I'll come to you. I mean, as Devi just mentioned, just adding on to her point, uh, there has been a shift in the way people have been interacting. Now, you have been looking at the overall global perspective in terms of how the consumer has changed, and the numbers that you would be able to share as well, some form in some way. 79% of the people globally have, moved towards adaptation of contactless and tap and goes, right? Now, from your understanding, what you have been seeing in terms of the data that's been coming in, the sort of transactions that have been coming in as MasterCard, where have you seen the consumer behavior happening? I mean, the groceries, I'm sure, must have picked up, right? So this is evident. At the same time, e-commerce has picked up. We have also understood lately that people have started purchasing more of comfort items online versus, purchasing other items. Where have you seen the dramatic shift happening, which would be quite insightful for the audience to understand as well from a global point of view?
Yes, thanks, Namir. So it's been quite fascinating to observe, from our point of view, seeing all the data around the world and seeing some of the shifts that we're going very, very slowly over the last few years, spiking up and concentrated in the last 2-3 months. And we've seen 2 or 3 phases, and the first phase was the clear one in February and March, what we call the containment phase, where there were big restrictions around the world, obviously contraction in spending everywhere, T&E, what we call travel and entertainment, so airlines, restaurants obviously closed, and we saw like 95% decline in that spend, which also impacted the e-commerce. I mean, everybody's saying e-commerce is going up, true, but not necessarily, because e-commerce was a big driver of, airlines and travel was a big driver in e-commerce. So that balanced the rest of e-commerce. The second phase, which where most of the countries are in now, what we call stabilization phase, is where you see all the spending stabilize to a new lower level. And it's been around, a few weeks that most countries are in that one. The focus is, as you said, on necessities, so food, grocery, but also on things like, we're talking right now on a video, so spending communication and internet gone up. Insurance, very interesting, has gone up, so people are becoming more aware of the fact that the risk is there, so there's been a spike in insurance spend. And interesting enough, home improvement, DIY, people are discovering their own hobbies, or probably they want to make themselves more comfortable while they work at home, so there's been a spike there. And obviously, as you can imagine, everything that is retail, Amazon, courier, and food. So what we expect now is a third wave we call normalization. When there's a ease of restriction, we observe something in Singapore. Soon, UK and some other countries might go in that phase where the spending will rebound, but unevenly. So digital will stay there. We'll see probably an increase in healthcare and personal care. A lot of people are eager probably to go to the hairdresser, so we expect that will happen. Maybe there will be some business travel, but we believe that categories like entertainment and personal travel will remain low until the fourth phase, which we would call growth, where probably the vaccine or some sort of cure will come. So it will be long in the future. But obviously, and we can talk about it later, the winner here is digital, and I believe some of these trends are here to stay, but let's talk about it later.
So coming to Davy's point, so I'll just connect with you as well over here, that post this entire drama, are people going to stick towards payments? I mean, the way we are doing it. I mean, this consumer behavior, is it sustainable? And at the same time, do you see that angle of trust into digital payments finally coming in? Because this has been massive, because previously the trust was a concern, right? A lot of people did not taste the ease, access, convenience of digital payments. Now, will that trust be, is that sustainable? Would that prevail?
Yeah, look, payments is not winning in payment. In theory, it's very easy. You need two things. I'll give you the recipe. Take note. You need two things. You need great customer experience, and you need safety and security. If you win those two things, you win in payment, right? That's not that easy, because as you know very well, if you give more convenience, more customer experience, there is a risk the security goes down. And a lot of people are very worried about that. Luckily, the industry has moved on. So there's a lot of ways of making sure that transactions now are secure. And I believe that many, many more people now are trying and are finding use cases. And the use case, you mentioned contactless. So there was a clear use case for contactless. And the reason why contactless started to go up was transport and mobility, right? So in the UK, just go to the tube, you tap and you get in, and it's a real value for the consumer. Now we found another one, cashless. People now are very worried. You need to go to the ATM, take cash, take the change. So this, I believe, will influence more and more people to try out cards. And if banks, financial institutions are adopting their safety and security measures, then I think more and more people will find it more convenient and secure and will stick to it. How many? We'll find out.
Now, I mean, this is a very interesting point that you mentioned, right? So you mentioned convenience and accessibility as well. At the same time, the trust being a core factor too, right? Now, I mean, Hakan, I'll come to you now. I mean, you must have seen that the landscape has changed a lot, significantly as well, when it comes to open banking and open finance. So Hakan, you being the global open banking lead for MasterCard, and of course, once again, studying multiple and various markets, how have the banks overall responded to this scenario? One, two, do you see, I mean, my favorite word over here is sustainable innovation, sustainable, initiatives that we are taking. So not that the initiatives are going to be there for, let's say, multiple PR purposes as well, that, hey, we are there and we're doing something in open finance, or we're doing something in open banking. How have the banks typically responded to it? And how are the regulators as well after that, after the bank's point of view, how the regulators have responded to the same?
Yeah, thanks, Damir. So I think from the open banking perspective, when we look into the situation where we are right now, right, we heard a lot now on contactless, on customer behaviors changing. I think banks need to think from the customer perspective at the end of the day, right? That everything starts with what the consumers are looking for. And what we have seen is indeed this trend into cashless, into contactless payments, into mobile banking. But we also see the trend of consumers not going out, so not going directly to the store. We've seen this uptake of e-commerce and commerce, which also triggers this whole thinking about how does that really change the customer behavior in the future. So when you look from the open banking perspective, and what open banking is providing as a concept is to enable banks to accelerate the digital transformation. So once you have the digital transformation, we heard that like digital, it's more about how banks can use open banking to offer services that can be provided online, remotely, so that consumers can do it from home or on their way to work or to the pharmacy. But we need to think about the post-COVID situation as well, because hopefully this whole dramatic situation will go away very, very soon. And then the question is what remains? So what are the customer behavior and points that will really remain? And I believe that especially that what we heard, that the uptake of apps, downloads, personal finance managers, all these applications that are kind of have a relation to open banking, will be something that will remain from my point of view. But now, what are banks doing, right? So banks are thinking about open banking right now, especially in the unregulated markets. We know all about Europe and all these markets that we always talk about, PSD2, UK open banking, all the others. They are tackling open banking. But most interestingly, we see markets that are not regulated, and banks are more and more asking us, and there are a lot of discussions with banks that want to understand what are the merits of open banking and how can I use that to collaborate with fintechs to enrich my offerings, to provide, for example, eKYC applications, to do digital onboarding much quicker. I don't have the capabilities as a bank, but I'm willing to cooperate and collaborate with fintechs. To do so, you need to have open banking capabilities in technology, but also with regards to organization. So how a bank is open to really collaborate with fintechs. And last but not least, you mentioned that with the regulators, the first initiatives that regulators have performed in not in open banking but in payments was to increase the limits for contactless, right? So that was one of the measures to tackle the COVID situation. The other part that we're seeing is indeed that regulators, for example, like in Egypt, have changed the regulation to enable eKYC, right, onboarding. It doesn't sound like open banking, but you need open banking capabilities to connect with data, with the banking system, to do it in an agile and frictionless way. And that's quite key. And that what I've experienced in the past few weeks and months right now with the COVID situation is to bridge that link between open banking, open finance, and how it can help to the regulators and the banks to find the right translation, what they need to do in order to create an environment that enables digital transformation much faster. Okay. And I think the consumers will benefit from that.
Okay, which is interesting. So, I mean, from your recent understanding and your recent conversations that you've been having, let's say with the banks, with the regulators, what is the, I must say, overall, sentiment now? I mean, as Devi also mentioned, in terms of the uptake of, fintech applications, how people have now started moving aggressively toward these platforms and these apps. Do you see the banks and the regulators now becoming, I mean, you've already answered that, but I would like more depth to it. Have they finally, I mean, are you looking into some form of openness, or is that just going to be openness on the surface and not on the inside?
I would say, and that's quite interesting also to see in the Gulf region where I was recently, that there is a quite interesting openness from the regulators' perspective, that they have just started, not only started, but now in this situation clearly understand their role. So what is the role of a regulator and what is the role of a bank to cater this situation? And I think from the regulators' perspective, what we've seen is that they've understood they need to be, let's say, more agile, to be in a position to be also an innovator, as a regulator, as an innovator, to be in a position to understand what's really changing in the market. What do we have to do? How do we collaborate with the banks to solve problems rather than really rather than to hinder innovation? And I would say that from banks' perspective, banks need to do a lot right now on, as I said, on boosting their online presence, to collaborate with fintechs, and the regulators are collaborating to enable this kind of regulatory framework in an agile way that allows them to build these services.
So, I mean, a very interesting point again that you mentioned is I mean, on the collaboration side and how the banks have been opening up. So, JJ, I'll come to you with this question, as Hakan just highlighted the point of collaboration and how banks have been working together with fintechs. Now, from your perspective, I mean, amidst this entire crisis, this entire chaos that's going on, we have seen investments being not being deployed towards fintechs. VCs have strongly gripped the investments as well, not letting go at the moment, and just understanding what's happening in the market and observing. At the same time, on the flip side, we also see Santander investing into a fintech lately for 453 million. At the same time, taking a stake of 50.1%, I believe, right? So, I mean, this switch, this on the flip, you see this investment happening as well from a large bank like yourselves. So what is that mindset? What is that sentiment that you carry that other fintechs, or maybe a lot of the audience that would be also hearing you right now as well, would like to understand as well? What is that thought process that Santander is going through at the moment, and what was the ideology behind this acquisition?
Okay, thank you, Namir, for the question. I would say that when it comes to a global bank as we are, you need certain different mousetraps to cover the whole fintech ecosystem in different approaches. We have a venture capital, a corporate venture capital. It's called InnoVentures. Is the way we invest into the ecosystem, but this one is designed for small tickets, right? So and this one never stopped. Pre-COVID, there were certain transactions in the pipeline that were, of course, valued at different multiples. But now what we see there is portfolio companies that were already with us. We made 30 investments so far, asking for more funding, and we've seen same shareholders doubling down in their strategy at the same price of the last round, so flat rounds. Okay. We've seen lots of them. So respecting the last multiple. Of course, you have a little bit of discount because there's some, some part of a startup life that, of course, they grew, and you are investing at the same enterprise value. But we continue investing in them because we really believe that these ones are to stay. When it comes to new portfolios or new investments, investing in a company is not a short period of time, and you get it. All of the ones that are going to see light now were in the oven, so are pre-COVID. But we have 4 new investments that we're going to disclose now during the COVID situation as a demonstration that we are close to the ecosystem. I cannot disclose which ones, but we have 4 or 5 in the pipeline. The one you mentioned, well, these ones are mainly related to Latin America. This is where we have our sweet spot. And for 2020, again, pre-COVID, we thought that Brazil, Mexico, Argentina were the places where the most interesting things were happening in this 2020, 2021. Maybe it's a resemblance of what happened in Europe maybe 3 years ago. So you see a little bit of lag period. And this is what is happening now in Latin America. Very interesting investments already there, and more to come, related with payments, lending, and financial inclusion. But the one you mentioned, which is the acquisition of the half of the company of Ebury. Ebury is an SME-focused startup. Well, not that much a startup; it's more a scale-up. And this one we arranged and we invested pre-COVID. Anyways, the strategy with Ebury is double down when it comes to offer a seamless and frictionless and fully digital offering to the SMEs that go beyond their domestic markets and go internationalized. We will see now in this situation how the SMEs are going to cope with this situation. Some of those will struggle, as we know, but some of those, the strong ones, hopefully, will survive and will remain with the banks that supported them through all this process. Also, we are trying to provide a spin into our projects that I have to say that became so much pragmatic, and we go straight to the short-term delivery, not thinking in moonshots or things like that. We, of course, trying to find how we can serve better the SMEs in the market that we have now, where, for example, processing the onboarding, processing all the documents of a company for a new customer and for an existing customer has to be fully digital, and this is a challenge. So we double down in these ones as well.
So I mean, so Davey, I mean, with this key point that JJ mentioned, right? So my question to you would be, that, I mean, we have understood like around 65 to 76% banks. I mean, this is, by the way, pre-COVID number. So all the numbers that I'm quoting are typically pre-COVID in terms of the banks and the credit unions would now want to be affiliated with a fintech. Now, you, in your previous conversation, did mention that the usage of challenger banks have typically gone down, and one of the primary reasons could be lower, revenues on the number of transactions that they're doing, the lower growth fees, high provisioning. There's so much more chaos that's basically happening, and this is all pre-COVID that I'm talking about, right? Now, from your perspective, from your view, knowing the fact that a challenger bank as well would make the revenue streams would be once again transactions, and the interest rates have been lowered as well. That's another major hit on them, right? So how has the sentiment changed from your perspective? I mean, pre and post, because now we have to talk about post, because post is the present, right? And then moving on from here, how has the sentiment changed? Is it still going to be the same 65 to 76%? Are you expecting it to decline? Are you expecting it to go up? So what do you see happening in your region?
Right. So if you take the challenger bank example, so you talked about revenues going down, and revenues, a big factor of that is because challenger banks make the revenue from foreign exchange through traveling and using the card in different countries. So that's a huge source of revenue. And some of the major challenger banking players, who I'm not going to name, but they offer things like lounge cards and priority access to events and at the airport. So these are the kind of places where challenger banks offer value-added services. Now, that whole value-added service segment has been hit thanks to COVID. So now the shift that we will see in the market will be a shift in the types of revenues that we see. So this is the core revenue and the value-added revenue. The core revenue will go up due to the higher number of digital transactions. Correct. But the value-added revenue will actually go down. And the number of downloads will go down because there is no significant need now to download a new app. The new users are not coming in due to the limited amount of marketing going on in universities, tourists coming in, etc. So the number of downloads and new revenues are going down, and the value-added revenues are going down. How this will pan out in the next 5 years is something to watch out for. But I want to touch upon JJ's point here in how investors think about these things, right? Now, one of the things we found is that in the last 3 months, actually Q1 of 2020 has been one of the best quarters for fintech investments. And I don't know if you know the history of this, because in 2018, we had a peak of fintech investments, and then it started going down in 2019. So now we are here in Q1 2020 with one of the best quarters we have seen. We have seen really huge investment rounds like Robinhood in the US with $8 billion. Stripe with another $600 million, N26 with another $100 million, Starling Bank in February. Now, the interesting thing though here is that all of these deals have worked with current investors, not going out in the market and finding new investors. So again, that was the point JJ raised, I think, quite briefly, and I wanted to raise this again because these big rounds that are being raised at the moment, and I can tell you in terms of numbers, this is a huge number, around 120 transactions have happened in the last 2 months. And all of these have happened with, or at least most of these have happened with existing investors. Now, when we go to post-COVID, and we are not in post-COVID here in UK, unfortunately, but when we do go to post-COVID, which is expected to be in July, August, there will be a slump on this because these challenger banks who are struggling with revenues would have gone through the current investors and a few rounds of funding again. So I expect the next 2 quarters actually be quite low in terms of investment rounds. And then hopefully we come out over the other side. But there will be lasting impact. I'm a pragmatist, and I like to point out that there will be lasting impact to fintech in every segment. And to your point of banks wanting to work with fintechs, I mean, this has been the interest from banks for the last 5 or 6 years. I think more than that. Every bank I meet wants to work with fintechs. I think I would say 100% of banks want to work with fintechs, but what is actually stopping them from wanting to work or actually working with fintechs is that they don't have the capabilities of either systems or in terms of culture or in terms of program management abilities through agile modes that startups are familiar with. So it's not the desire that's stopping this. I mean, we've been in the fintech industry for long enough to know that. It's actually the practicalities around how do we work with them. And we found that 6% of banks have said that they have got ROI from these partnerships. So out of all of the banks who have worked with fintechs, only 6% feel that they've got the ROI in terms of revenues or cost savings. So it is a worrying number to me, and I think it's a long-term problem, not a COVID problem that we have.
And very interestingly said, I mean, the point that you mentioned that in a saturated market like yours in EU, especially where you have many challenger banks, especially in the UK, right? Whereas other markets where there is a dearth of digital banks and digital propositions, there is a significant need for platforms to actually push in and at this point of time acquire, because a lot of markets have not really tasted the, I described fintech as ease, access, convenience, transparency, affordability, and delight. They haven't really experienced the ease and access of what a challenger bank has to offer or a digital proposition has to offer. So I think there's a significant need. In EU, there's saturation, but other markets, there's once again humongous opportunity where these platforms could tap onto. And secondly, the other point is in terms of the banks having the legacy mindsets. I think this has been a discussion that we've been having for legacy years as well ourselves, that the legacy mindsets and that still prevails. But at the same time, I believe the current pressure that's currently there in the financial ecosystem does push a large institution to rely more on the access and the leverage of these technological players that carry at this point of time, which they would not be able to carry. Because you see, once again, we do have significant expenses in capex and opex in the bank, which eventually you have to account for. And at this present crisis where there are layoffs, and at this present crisis where the recession is taking off to a whole new level, there is going to be humongous pressure than it was even, like, I would say 3-4 months before. So things have changed and will change dramatically. And even when we're talking about payments, Fabrizio, my question to you would be that, see, we've been talking about these players coming in, and of course we've seen the rise of these new methods of payments as well, contactless and tap and goes, e-commerce, as you have also mentioned as well. You shared your views on that. But my concern is always going to be on something very critical, which is cyber, right? So when you have a lot of these transactions happening, you are exposed as well at the same time, number one, right? Number two, the other point is data. So I'm right now probably dealing and engaging with 3 or 4 platforms, I must say. And my data is going, I don't know who has my data and who's doing what with my data. I have no clue. So who typically owns the data? What's the angle of data privacy? Are we going to be exposed in the new normal? And how the consumer interest is going to be protected?
Yeah, so thanks, Nami. You're touching a topic that is very dear to my heart, and it's data ownership, rather than security, but let me say ownership. But before we get to that, you mentioned also security, and as I said before, experience and security being the second, the flip of the coin of experience. And just let me also give some numbers. It's interesting because the total amount of loss for frauds globally is estimated to be around $6 billion, but it's also very interesting that the total amount of loss that is estimated to be due to false positives is $8 billion. So actually, it's where you draw the line. You open more, you open less. How do you do it? Luckily, I mean, the security piece, so the fraud, the online fraud methodology, thanks also to regulation, which is in this case, as Akan said, acts as a catalyst for innovation, like PSD2 in Italy have helped, in Europe, have helped increase the level of sophistication of digital security. One that is particularly problematic, as you said, is rather than fraud, is data ownership, and that's a particular way of looking at your assets, because people don't really believe that data is really an asset. They obviously are very worried about losing money, and they are going ballistic if they lose 60 pounds on a transaction, but they don't understand that every day their data are given to anybody, and a lot of companies, all the big ones, are profiting from this data, and most of us don't even know. It's almost like it's a funny comparison that I always draw. It's almost like if we say the data is the new gold. You remember when the conquistadores went to Latin America and they just bought the gold for very small items, and the people that didn't even know that was gold. And that's something that I think is happening right now with us, giving away all that gold and not even caring or receiving some small little pieces of software that are probably not very valuable. So the important thing is not sharing the data. I think is awareness of the value of the data, and especially of what we get out of the data. Let me give you an example. These days, there's a lot of discussions about privacy on all these apps that are supposed to protect our health, and people are very worried to give out their data. And what they're going to receive is probably, health and a future for the humanity. So maybe that's a nice use for our data, maybe better than some of the apps. So the first thing that is important to me is that consumers are aware that data are their property. What they do every day is theirs. I have a smartwatch. I go, I run, I have a lot of data, and they are stored here, and they are mine. Now, I might want to share them with the company that does this, but I want to make sure of a number of things. First of all, I want to make sure that these are kept secure. And going back to cybersecurity, we must pretend that we must need from companies to share the level of security they have. Secondly, we need to be very cognizant of what they use the data for. Are they going to use for the things that we ask back, like, tell me how many kilometers I can run before I collapse, or they're going to use it to market it? Maybe I'm okay if they use it for marketing, because maybe they'll give me a product that I care about, but I want to know, and I need to know. So all that to say that we're very much behind in terms of customer awareness. And I believe one of the trends for the future could be, and one of the fintech trends for the future could be sort of an aggregator that help me monetize my data. I can decide who I give my data to. I can decide what I get in return. And why not? Maybe I can even sell my data. So companies are now more incentivized to make good use of data, and maybe they share some of the profits. And then maybe I can decide that some of the data, if are anonymized and if they're used for the greater goods, I can give for free. I give them for free to Google Maps if they can help me to go back home 15 minutes earlier because they show me a better map. So all this movement, I think it's in its infancy, but that's something that I think will be very much making the headlines in the next few months or years.
So, very interesting again. Point after point, it's getting interesting. So, talking about sharing of data, Hakan, my question to you here, as carrying on to Fabrizio's point. So, data then again reminds me of open banking at all times, right? So, now when we're talking about what's basically happening with the banks, how do you see the banks pushing the use cases for open banking when it comes to use cases, not just in specific to retail, but also businesses? How do you see that shaping in?
Yeah, it's a very good question, but let me just first look into the two segments, the main segments that we are looking at. The one is retail, the other one is for SMEs, but also corporates. But let's focus on the retail and SMEs. And also to bring in this kind of COVID context also in it. I think that also helps to emphasize what are the main areas or use cases that banks are looking at right now or should look at right now. I mean, obviously for the retail space, there are these kind of applications on the market that are quite kind of seen as hygiene factors, like personal finance managers for retail customers. But we also see the development in the payment space where players are coming to the market where they want to combine open banking and real-time payments for new applications for retail customers. But I think that is a space where banks are a little bit struggling because it's not that easy to identify the revenue streams in the retail space, even though it's not the case that there is no revenue stream, but it's more about how to monetize the data. So what type of mechanisms do you need to bring in? So open banking is just a mechanism, it's just a concept. You need to think about artificial intelligence, about data analytics to monetize data. I think as an example, we can talk about, in the retail space, the personal finance managers, as I mentioned, where, there are meaningful recommendations to the customers using the data that are giving the consent to the banks or to the fintechs to use the data to come up with kind of suggestions and some type of new marketplace and products where end consumers can benefit, and that can create revenue streams. And that segment that is mostly neglected in open banking is the SME space. In the SME space, we know that SMEs are willing to pay a fee for any type of service in the SME banking space. These customers are willing to pay a fee. And open banking is, bringing so much efficiency and new type of products to SMEs that was not there before, right? It's it's not rocket science, but it's possible. Like integration of bookkeeping solutions, some kind of liquidity management tools, and so on and so forth. That's a space where banks are more and more looking at right now. But in the COVID situation that we are right now, I think banks need to really invest in the online presence. As I mentioned, finance managers is key, digital onboarding, coming up with a better customer experience in the online banking, mobile banking. But how can banks support SMEs, right? I mean, SMEs right now are struggling, as we heard today. How can banks really come up with kind of new type of supply chain financing, discounting, factoring solutions, cash liquidity management? Open banking is helping to build these services. It's the same with, building collaborations with fintechs. Especially in the SME space, banks are struggling to find out frictionless end-to-end solutions, sometimes bringing in new technologies, cash liquidity management solutions. They can partner with fintechs because the solutions are all over the place. So open banking is, taking this COVID situation and also open banking as a mechanism, right, as a concept, can bring, a lot of new opportunities for banks to generate revenue streams. And last but not least, Fabrizio mentioned that with the concept of, data and data responsibility. I think, and this is something an open question because nobody really knows if that remains. Is this, willingness to share data, especially when there is a kind of a benefit or a higher good that end consumers are willing to share data, right? As we see right now in the COVID situation.
So I mean, JJ, coming to you at this point of time, like a few things that I would like to basically ask you from the bank's perspective. Where do you see these open banking and open finance now plugging in? Is there a gap that you see that can be filled in? I mean, Hakan currently mentioned on the SME side, fintechs have been all over the place. There's no apt proposition that's currently out there. But understanding from Santander's perspective, where do you see the gap that can be filled in by open banking and open finance?
Yeah. So first of all, I have to say that Hakan is spot on. The banks, or our bank at least, but also when we compare notes with others, I can tell you that that SMEs, and not only like small companies, also mid corps and even large corps, maybe not necessarily multinationals, are the focus right now. It is one of the most profitable part of the market, first, and is the most underserved, I would say. Why? Because the focus for commercial banks has been always retail. And I think that in retail, we are quite full-fledged. So when you look at digital offerings, most of the products are already accessible through Homebank, through apps, through different omni-channel offerings. When you look at SMEs, this is not the case. There are certain functionalities that you have there, like opening an account if you get lucky. But you can open an account, but more than 65–70% of the SMEs come to a bank for a financing facility. And these connects into the risk workflows. And this is quite complex when you look at it. And make it totally digital is tough. So I think that now we have an opportunity. We previously had pre-COVID, and we certainly have it now post-COVID, or in the walk to, or in the meanwhile, in the walk to the post-COVID situation, which we expect to be there in August or something like that. When it comes to transactional products, I would say it's mainly cash management for starting with, and cash management systems tend to be quite monolithic. So it would be a light version of a cash management tool, connecting different corridors and connecting different countries. These, we have kind of what we call the red carpet service for the super large corps, but there's not a light version for the SMEs/mid corps. So I think there's an opportunity there. Supply chain finance opportunity there as well. Working capital solutions that are in the hands of a proper, I won't say proper because all of them are proper, but large CFOs that are specialized is bread and butter for them. Not the case for a small company that maybe they don't even have a CFO. Maybe it's the CEO dealing with banks, and that's it. So providing this red carpet service to the whole long tail of clients that you have there down the line is very, very interesting. Of course, trade finance is the sweet spot, and there's money to be done there in this market. We will see how it behaves, because it's one of the most impacted products in digital, but there's a certain level of uncertainty how all these corridors wake up after the COVID situation again, and restart working in good metrics. For sure, the China, Latin America, and the China-Europe corridor is going to be there and remain standstill, if not larger. And this is where I think we can play an edge. Of course, you ask about open banking. The way we see open banking in the bank in Santander is that first we have to build a container, and the container have several pieces. Some of those are already half built, but there's room for improvement. For sure, the products are digital onboarding. Also, all that deals with ID and V, so identity and validation, and also what deals with open API and marketplaces. This is kind of everywhere. Everyone is trying to build a similar mousetrap to the open banking ecosystem. I think that this is not made out of, a year or a couple of years that you take it seriously. It's a journey of more than 5 years. So we are almost there. To Debbie's point of working with a fintech implies a cultural shift, and having also proper tools is totally right. Back in the day, we started this journey maybe 6 years ago, and typically in average took kind of 2 years to really liaise with a fintech, plug it, scale it up, and put it into production. With these open banking tools, we reduced from 2 years to 6 months. 6 months seems a little bit long. I think we can do in 3.
It's still faster than many regions.
But we have relationships with more than 200 startups already. So, it's not that bad. But it's a convoluted market. You have to deal with the clients on one side, deal with the regulators on the other side, which is, cross-regulation can be a pain. Also, the large techs, so the Google, Amazon, Facebook, Apple, trying to eat our pie, and the fintechs come in there as small fishes. So, it's fourfold. I'm not providing excuses here, but it's quite a complex market.
Indeed, it is. Now, I mean, now I'll take a switch over here because we have the last 15 minutes. So I'll take a switch to a different side, and I'll come back to Davey. I mean, with key insights, because then you drive the conversation, Davey, with your key insights that you keep coming in with. So I would like to ask you at this point of time. So I mean, I've become used to working from home, an extrovert, and I'm sure all of us are working from home right now, right? Now, knowing the fact that majority of us right now operating from the comfort of our homes and we have become a lot more comfortable with it, do you see the industry changing because of this? I mean, so see this question could have an answer. This question may not have an answer. This question may have a different point of view as well. So, do you see a shift in terms of how the industry is going to adapt to the work from home concept? Is that going to aid in some form of productivity? Is that going to lead in some form of efficiency that the industry can look into? And at the same time, what can you suggest can be done to adapt well to it?
Yeah, it's a brilliant point to kind of think about and analyze a bit more, because you're absolutely right. I mean, if you look at cases in the countries who have first had COVID, which is China, Singapore, Thailand, you kind of see that the productivity has gone up significantly. So the fintech industry in China has reported 85% more productivity,
Oh, wow, fantastic.
and that has translated to revenues. So we are actually seeing a revenue increase coming out of China. And this, I hope, is the case in Europe as well, because we desperately need that. But the point is the productivity and efficiency of working from home is not something to be ignored. And I think every single bank, every single fintech is aware of this now. And fintechs have already been kind of, based in virtual environments and working globally. But banks are getting increasingly aware of this. And Barclays, actually, the CEO has announced that they will now reduce the footprint in their headquarters in London. And they are now going to insist on working from home for all of their employees as much as possible, except in the branches. So this is one of the biggest shifts I've seen in the banking industry in the last 10 to 20 years since core banking solutions took over on the technology side. So it's quite a big shift that we will see in terms of new tools and new program management methods being introduced in banking. And fintechs will now find it easier and better to work with banks. So if we're predicting about 200% increase in remote working, and one of the things this will definitely do is also improve the gender balance of work as well. So now we are able to bring in all kinds of ages, all kinds of genders, and all the people who are quite distant from London, especially in the UK, that the government was trying to develop as hubs of fintech. Now anybody can work with these companies. So this is going to be economically quite significant. And I think this is a study that I'm in the process of doing, but I can already see revenue impact on working from home happening, and bringing almost half the workforce which have not been working now back into the industry.
So, I mean, it's interesting, right? I mean, first we had the platform economy, and now we could have the work from home economy that could be surfaced, right? So I think this is something that is going to emerge quite well. And a very interesting point that you mentioned, the gender balance bit, because now there's more opportunity and there's more equal opportunity as well. And I think this will just lead to more. I am a big fan of the word efficiency and effectiveness. So eventually, it sounds quite cliched and quite badly used, but apparently this is something that we're going to experience. Now, Fabrizio, in terms of payments as well, I mean, do you see and do you expect there to be some form of contactless commitment coming in from the industry? That now so my point is that I just don't see contactless limited to payments. Number one, I see contactless could be now the new norm, even when you go to the mall, right? Or all of our experiences, even when we're stepping into an elevator, it could turn out to a contactless elevator, probably from the from the comfort of a phone. We can also we can just you can select what floor we need to go to. Just a thought out loud. But do you think there needs to be a serious contactless commitments, not just from the company's perspective, but also from the regulator's perspective, to push the contactless mandate more and more?
Yeah, so interesting. What I always when people ask me what's your dream, how do you see the future for payments, I always joke that my dream will be for payments to disappear. And what I mean is not that we all disappear as an industry, but is one of these industries that are underlying, and the best thing for this underlying industry is not to be noticed. So I don't wake up in the morning wanting to make a payment. It's not my dream today, but I need to do it. Everybody, all of us need to do it. So contactless and the disappearance also of the card as a mechanism has allowed us all to go and do stuff without notice to be paying. So two of the trends that we see and are related to what you say is first of all is that the contactless, but the disappears. Not only contactless, I would push it more to also card on file, and the fact that you just pay and you don't realize to do it. Have you? I don't know if some of my London colleagues that happened, but I take Uber so often that when I go into a black cab, I usually get out of the cab and don't pay, and the cab driver needs to stop me and say, "What are you doing?" Right? Because I'm used to the fact that I have become the payment, the person as the payment. So that's the first thing. So, you mentioned the regulator. That's interesting, but I think more than regulator, these kind of use cases, starting from big cities, from transit, will really help people. And on the other spectrum, I think the convergency of payments, so going beyond card, will become very, very important. So in the past, the normal use case for payment was I go to a merchant, so the person to a merchant paying with a card. Nowadays, with the fluidity of the economy, that's not anymore the most obvious use case. There's people paying to other people, there's government paying to people, there's even industry paying every day to gig workers. Think about Uber. I pay a Uber, but also Uber needs to pay the taxi driver. And what do? You pay with a card? No, you pay with an account, you wait for 3 days. So things like flows of payment, which are contactless starting with, but then cardless, it's where I really see the future. And I think it's happening right now with some of these use cases, including the peer-to-peer payments.
Great. And Hakan, I mean, if I was to ask you in terms of the top 3 trends that you would see that would be there when it comes to open banking, be that on the retail side or be that on the business side, what would that be?
I would give you, let's say, a more broader perspective on the main directions of open banking or the trends. I think first of all, retail will be a big push into direction of frictionless and invisible payments, as Fabrizio said. So open banking will be a catalyst to push that into that direction. But I won't call it open banking anymore for the future. I think we are now even talking about open finance. Open finance goes ways beyond that what we today understand as open banking, especially in the markets where we are talking about regulated markets. Open banking, payment initiation, account information, and open finance goes ways beyond in other asset classes, different type of transaction flows. So not only payments, but also other type of transactions in the finance space, where payments plays a kind of a very important central role, where different type of services can be provided, and a certain type of linking payment flow that is invisible can be provided by any type of payment mechanism, but hidden in the background, driven and facilitated by a kind of an open finance ecosystem. So that's why, the first main trend is really open banking, the evolution to open finance, and of course, OpenX, open data, where different other industries are going to open up as well. We've seen regulation in that space as well, such as in transport and mobility, but also in health. And I see open finance as the underlying kind of layer, openness layer, that is playing a very important role between the different industries that are opening up facilitating the payment flows, the financing functions for the ecosystem. So that's the one thing. And the second part is indeed, we see, a further bigger wave of regulation, I think. Even in this COVID situation, regulators such as in Brazil or in Israel, they are still pushing. So there is nothing that really stops. It just delays these initiatives, but I think there will be more and more coming up in different jurisdictions. And third point is, of course, I mentioned that in the discussion, is regulators as innovators, that regulators are more and more becoming an important actor in the evolution and development of digital transformation or digital payments, digital banking as such. And regulation will play a role indeed here. Be it a prescriptive regulation or be it a collaborative regulation where the regulators are collaborating with the banks, with fintechs and governments and other type of stakeholders in the market. I think that's pretty much that from my point of view. I don't want to avoid to mention any concrete use cases because nobody really knows. But if I would know that, probably all of us would now come up with their own fintech right now, knowing exactly the use case in 2 years. I think that
these are the insights, Satan. Give us the insights when you find them.
Sorry?
Give us the insights when you find them, please. Yeah. So thanks for that. And JJ, I'll just come to you with this. Like, I mean, from your perspective, because we're short on time as well, I think we've crossed it. So quickly on a few core important points. I mean, some people like talking about crypto, some people don't like talking about crypto. At the same time, we have blockchain and then the decentralized finance. As Santander, as a future forward group, I mean, how do you see these three critical pillars?
Yeah, we'll continue our investment in this technology that we found very fruitful so far. As a bank, we are interested in blockchain. So the technology underneath the distributed movement, I would say, not that much interested into pure crypto. However, we've seen the realm of tokenized assets, and actually we started this trend in the market with the end-to-end digital bond issuance that we made a year ago. And this one we will see more and more. We see issuers pretty much interested in this type of new assets. Actually, it's not a new asset in itself. It's a new way of issuing, right? But we can see also different funding or fundraising mechanisms. Not necessarily the classic IPO, not necessarily the classic bond issuance or traditional loan. We can see another mechanisms in the back of this new digital assets realm, and there we will continue pushing. Another use case that we like and will intensify would be the self-sovereign identity. So all what deals with identity and KYC on blockchain. And providing these SMEs and these individuals to be on top of their data, controlling it through a digital identity and trust solution that can be secured on blockchain. We are also intensifying in terms of liquidity management and all that deals with B2B payments and cash pooling on blockchain, things like that. That really works super well, and also is the B2B version of the constructs that we already made in the peer-to-peer market based on blockchain, as OnePayFX and another ones. So net, we see that this technology came to stay, came to remain. In some parts of a bank is business as usual already, so not that much emerging technology. And this is the way I see it. It's kind of a threefold, fourfold strategy. Not put a blockchain in your life. It's put a blockchain where it makes sense.
Yeah, it makes sense. So I mean, there's a good friend who says, do I need blockchain? No. So it doesn't need to fit in everywhere. It's like the Panadol for everything, right? So, kind of. I mean, JJ, quick one. I mean, the last 15 seconds, like your top three trends that you foresee.
Well, what I see is in banking is offering the full product and service catalog in digital. That today is not the case. Being able to onboard and fund a company, so in the SME side of the market, faster than we do, and also deal with fintechs faster. 6 months is too much. They get tired of us. So we should be faster.
You should set some benchmarks, because there are a lot of faster ones than you that who should learn that 6 months is also not enough. But in any case, fantastic. Davey, quickly on to you, like your top 3 trends to watch when it comes to fintech, considering what's coming our way.
I think SME is definitely going to be a huge area of focus. I think banks are now realizing the potential of that market. A lot of fintechs are now coming together. So apart from SME, my second related trend will be fintechs actually working closely together now. So instead of chasing banks, now they will try to form consortiums that can solve large issues that consumers are facing. So we have seen a $500 billion consortium being formed in the US between Cabbage, OnDeck, LendingTree, etc., with the help of President Trump. So those kind of initiatives, thanks to the challenges we have in the market, that's going to be tremendous. The third trend I see is the emergence of completely new payments products. And I think my panelists have touched upon that. But in the UK, we find a lot of shops and retailers now launching their own retail payments products, prepaid cards, for example, for people who don't have a digital access. So we'll see the emergence of a few new products that actually solve the issue of financial inclusion, I think. So these are my 3 trends.
Lovely. And Davey, your closing remarks as well. So, I mean, anything that the audience would like to take away?
I think numbers don't lie. So it's definitely a shift towards a new way of living and new way of working. We will see improved productivity in everything that we do. We recognize the value of merging work and family and giving it enough time instead of letting one hog your entire life. So I think all of these will give us a clearer picture of where we want to go. And my closing remark would be that do what works for you and what's your strength, and focus on your strengths in the market.
Fantastic. And how can people reach out to you? Would you like to share that too?
The best way to reach out to me is via Twitter. I'm on Twitter 24/7. So if you send me a DM, you will get a quick response.
Fantastic. That's super.
Fabrizio. Be here. And thank you, Namir, for
likewise.
moderation.
Fabrizio, I mean, top 3 trends coming in from you from the global perspective, please. We would love to hear what's coming in so that we put our money in it.
Yeah, well, I think we talked about many of them. My favorite, as I said before, is the disappearance of payments, or how I can put it maybe a little bit better, the rise of invisible payments. So that's the first one. Then data responsibility. So we need to be more aware of where we put our data. And I think the industry of data management will change significantly in the next 2 to 5 years. So that's one to watch. And I think some of my colleagues have touched upon it. I think, as we said, cooperation between banks and fintech is very important, but we're seeing fintechs cooperating very happily without some banks. We're seeing, N26, for example, creating a commerce place and selling products from other fintechs. So I think, fintechs with fintechs maybe can beat banks.
Fantastic.
Maybe not.
Maybe not. I was provoking that. We were a little bit too.
I know.
Quiet.
Maybe not.
Sorry for that.
So
we love banks, as you know.
your top 3 trends. I mean, what do you foresee coming in?
Are you asking me?
Yeah, of course, Hakan.
I think you asked me that already, no?
But top 3 trends overall, not just in perspective, not just limited to open banking.
I would say, I think open banking has just started, right? We are all experts, we talk about it, but I think there are not so many countries still, if you look into the map. So we will still see a clear trend in applications and also in infrastructure. So companies that are building standardized, harmonized access to account information or some type of banking services. And then everything that is built on top of that, which are the kind of application space. I talked about it, PFM, BFM solutions. It doesn't sound very sexy to us because we all heard of that, but I think we still don't see this kind of traction right now. We will see that more and more in the future. SME was mentioned. I think SME as overall as a client segment using open banking rails is a clear trend and the way to go to make money in the open banking space. And then last but not least, I mean, especially in the payment space, we talked about invisible payments. I think that using open banking, real-time payments mechanisms, will see a trend also that the account-to-account business in connection with open banking will also go up. In what fashion, we don't know yet, but I think there are some examples today, and there will be more coming up. I think that will be also an area where we see some traction.
Fantastic, great. And I'm sure if anyone wants to reach out to you, LinkedIn is the best platform.
Yeah, absolutely. LinkedIn and Twitter, but especially LinkedIn, yeah.
Great, and same goes with Fabrizio and JJ as well. I mean, since you have the opportunity, please share how people can connect with you.
Sure, LinkedIn really works. I forgot to mention, and then there's another trend that is out there, as in the oven, as we say in Spanish, is the CBDCs. So all the central bank digital currencies, all that.
Yes, my favorite topic.
Yeah, your favorite topic. I know, that's why I bring it up. No, I don't know. This is about happening, and this is the perfect momentum, I think, for the central banks to really jump on these ones. They've been thinking on these. Of course, have to be done in a proper way and where it fits all the regulatory constraints. But for sure, we will see that. We're part of the finality project that this goes in this realm. Every single central bank is trying to build their own mousetrap. I think that that the European Central Bank, Bank of England for sure, and the Fed are quite advanced. So this one is one of the trends we're going to foresee. Maybe now. Maybe
and I think there's a lot of work to be done because central banks typically in economies need to first understand the goal, as I always say, that they're trying to achieve by launching their own CBDC. Because the goal is critical to understand what we're trying to achieve, and then the sort of CBDC that you want to implement. So of course there are multiple sorts, synthetic being my personal bias is towards synthetic, and then you have wholesale and retail as well, and then your goals then typically affect all of that, and then ledgers that you will be using. So I think there's a whole, this discussion could be amazing, and you both could continue as well. But I think it was a fantastic and a great discussion with you all. It was my honor to be with you all and to be able to have this conversation with JJ, with Fabrizio, with Davey, and then Hakan as well. Yeah, I learned immensely from you, and I'm sure the audience that is hearing you today learned a lot, and I'm sure is going to be taking away something really insightful, something really key from these discussions. So I would like to thank you all, number one, all four of you, for being present, for taking out your time from different time zones. Thank you very much, one, and to the audience as well who is listening to this amazing conversation by these four great experts. They're not going anywhere. The world is small. The world's a global village. You can get in touch with them, and the conversations can continue even after this amazing session that we had. This is Namir Khan signing off. Thank you very, very much for your time, and look forward to keeping in touch with you all. MENA is also one of the regions that you should focus on. It's a key region. It's a gold mine, as I say. So look forward to having more discussions. Thank you.
Thank you.
Thanks.
Thank you.
Thank you. Take care.
Bye.